It was a day for the bulls on Wall Street, stocks surging after the U.S. delayed some tariffs on China. But trade tensions are far from gone, and one money manager has 4 ways to protect your portfolio against further damage. Let's bring in Todd Walsh, the CEO of Alpha Cubed Investments. He's got $1.4 billion in assets under management. Todd, great to see you again.
Thanks for having me, Melissa.
What's your general market view at this point? Has anything changed?
You know, I started in 1986, and there are 2 phrases that really get my attention. One is the SEC is launching an accounting inquiry into a firm for irregularities. But the other big one is troops are massing at the border. And there's a lot of issues out there, notwithstanding today's wonderful relief rally. I go back and I look at the 10-year at 3.2 last year. Remember, we were all really worried about it going to 3.4, 3.7. Flash forward 1 year later, we're at 1.7. Growth prospects are murky at best. And the market is still at the exact same level that it was at 1 year ago today, at about 2,900. So what's going on? We've got a feedback loop between the Fed, the real economy, trade wars, the White House, and it's keeping it in suspended animation. We think this is probably not going to be resolved anytime soon. So at Alpha Cubed Investments, we've been steering our investors in a different direction all year. You might remember on my last visit, I was talking generally about value, but now we're lasered in on a certain type of company. Companies that are U.S.-based, large cap, value-based companies, companies with a below-market metric, companies with great earnings per share, cash flow per share, revenues per share, but more importantly, higher than average dividends, 2.5%, 3.5%, 3% kind of thing, with sustainability, good payout ratios, and definitely above average payouts.
Okay, we have a full screen, I think, of all the picks that you like: Verizon, MetLife, United Parcel, Johnson & Johnson. We can see that the yields are much greater than the S&P 500 yield overall right now. I want to ask you on some specific ones, though, for UPS. UPS has had difficulties, and it is exposed to a global slowdown, so why would you pick that? UPS
came out with a pretty good earnings report a couple of weeks back. It's been probing that 120 area. And with that dividend at 3.2% and I think a 15 times multiple, we think they're going to do well in this environment. We think this class of investments is going to act like an ATM for investors. And to paraphrase the late, great Ross Perot, it may act, or what we may see as a giant sucking sound of money into the sector where it's extremely well treated.
Okay, and Johnson & Johnson's got some litigation risk involving talc, and I'm just wondering how you handicap that.
Definitely a headwind for that company, but on the other hand, this leader, diversified healthcare company, paying about a 2.9% dividend, a 15 times multiple. This is one of the only 2 companies in the country still rated AAA by S&P, the other one being Microsoft, paying dividends since 1963. It's a very high quality company, and we think they're going to do well.
All right, Todd, great to see you. Thanks so much. Todd Walsh of Alpha Cubed Investments.
Appreciate
Which one of Todd's stocks do you like? Or maybe you don't like any.
No, I do. I do. I like Verizon and I like Johnson & Johnson. I do think that if you break down his arguments about the scariness out there, the cyclicality of UPS and even MetLife, I mean, those are sectors I don't think I want to be in. But Johnson & Johnson, in terms of their pharma bucket, which is a significant part along with their medical devices, they actually have growth there of 8 to 9%, which is actually better than their pharma peers. J&J, I would own.
All right, Mark.
So we like we own Verizon, we own Johnson & Johnson. We did own MetLife until a couple months ago. We sold it. We moved the money into Progressive. I think there's better opportunities within auto insurance right now. All the vehicles are much more safer today with adaptive cruise control, autonomous driving. All that stuff is going to reduce accidents. But at the same point in time, premiums are not going to be reduced dollar for dollar.
UPS really stands out to me as something that's quietly getting better with no attention. This is a stock that went from 140 to 90. The bear market's happened here. Good earnings, stock responded. We love stuff that goes up on bad news. This one's quietly getting better, and it speaks to an environment where the world's on fire, yet this air freight stock is getting better, and the truckers are actually quietly getting better. Maybe the market's already discounted a lot of the problems that are already out there.
Yeah, so as Todd said, speaking of Ross Perot and sucking, I mean, Verizon unchanged on the year, kind of sucks. But AT&T quietly up 22% on the year, trading at 52-week highs, breaking out of this massive downtrend it's been in since the highs in 2016. That one looks really constructive and actually a much higher yield.
I like the Chris Verrone. I love it. I mean,
love it. It's turned.